Alright, so let's begin the show. And millennials are betting big on SIPs and they have unwavering interest in mutual fund industry. Recent reports suggest that the COVID-19 pandemic coupled with the increased adoption of digital technologies has sparked interest among millennials to invest in the equity markets. Let's understand all of this and let's talk more on this with Manu Prasad, the Chief Marketing Officer, Scripbox. Manu, good evening and welcome to the show. So let's decode the data first. What's outstanding and what's striking in the CAMS data that's come out, where millennials are showing their increased interest in investments in equity through mutual funds? Manu, hi, can you hear me?
Yes, Kavita. Good evening.
Hi, good evening. So I was just asking you that let's decode the data and what's different and what's so unique and striking in this data that you see for the first time. I mean, the trend of millennials investing in equity market has been going on since the pandemic. We've seen the number rising. Talking about this data, what's striking?
I think the fact that in the last 5 years, practically 50% of the people who are coming in to invest for the first time are millennials is itself a big deal. And I think this is due to a bunch of factors. Obviously, like you stated, the pandemic has had its effects. It did provide a jolt, both in terms of the need to be prepared for finances, as well as the market boom that followed immediately after. But I think what is heartening about this entire thing is the maturing of the ecosystem. And I look at it from three aspects. One is from a distribution point of view, where there is an abundance of information about different investing venues, different products, all of that. And there is accessibility in terms of the ability for a millennial investor to invest easily, it's online or offline. In terms of product itself, the financial products that are becoming increasingly attractive because of the growth factor, there is regulation, regulatory oversight that assures safety for the investor's money. And when you really compare to other products and look at it in terms of tax efficiency, risk-adjusted growth, etc., it actually becomes sort of what we call TINA. There is no alternative, right? And to help all of this, Amphi has done a phenomenally good mutual fund Sahi Hai campaign, which is built on great insights on what really customers are feeling, what exactly they want. So together, these are some of the things that have driven the overall investing trend for millennials. So a bunch of heartening statistics once you start looking at the study. And this is reason to believe this is more of a long-term effect and not really something that's a blip in the chart. For instance, 67% of people have gone ahead to the SIP route and not the lump sum route, which means that they are looking to the long term for investing and not really looking at a one-time payment or time investment for the short run. 95% of the users have chosen advisors or mutual fund distributors, which means there is an intermediary who's also looking out for the interest of the user. 29% of those who have started with lump sum investments added an SIP. And the reverse is also true. People who started out with an SIP also did a lump sum.
Right.
There is also a lot of diversification happening, not just in terms of mutual funds.
Let's get into the specifics over here now. Since you've elaborated so much on this data, so we've seen the numbers going up through SIPs. Okay, that's one clear-cut interest that we are seeing. Also, women participation has increased, and almost talking about millennial investors, 30% is women. I want to understand from you, as per your data analysis, as per your research, what is that category in equity where they're investing, even if it's through mutual funds?
Sorry, can you repeat that?
What is the category in equity if they are investing through mutual funds is the most, it's going like hotcakes?
So at least from the data, what looks like is that flexi cap is doing very well, and so are small caps. But long term, which is large caps, etc., are also not doing too badly. It's a fairly even mix with about 20% for flexi caps, followed by about 13% each for small cap. Sectoral funds are doing well as well. That's probably the highest percentage that you can see. So this is the average mix of the investor.
Concern over here is the millennial investors that we are looking at are still urban-oriented investors. Although the entire equity participation, if we have to look into data post-pandemic, we have seen mid and small towns also doing good. I mean, we've been seeing participation in equity through mutual funds even from those small towns and mid towns, okay? But then when it comes to millennials, it is still urban. Do you think this spreading to mid and small towns, also tier 2, tier 3, or you think that this phenomena is very urban based, where people are much more educated and there is a lot of financial literacy that's going on?
At this point, it looks like it is urban oriented, but I believe in the next 3 to 5 years, we will see a shift towards, or at least a greater share of rural participation in this B30. And this is probably following pretty much where the internet goes, whether it's in terms of e-commerce or any other service provided by the internet. It's a function of the macro context. Obviously, there is employment, there is income levels, general awareness, like you suggested. Also, the cultural attitude towards different kinds of
when it comes to following social media influencers and influencers, I'm sure even you will agree the reach of internet is great. Okay, so I don't think there's a point we should be really thinking much about it. Yeah,
I understand.
Yeah.
No, absolutely. If you look at it from if you look at who has cracked the overall millennials, adding to the investments, you're looking at RIAs who have probably got a huge share of it. It's about 35%, right? In their share of B30 millennials is about 1%. Even if you look at the next year, which is banks and MFDs, it's still less than 30%. So I think it's a distribution problem more than anything else. I think one solution that will crack it in the near time frame would be digital, right? The level of paper usage in the operations of mutual fund investments is 80% in B30, whereas it's 15% in urban. So the entire idea of distribution, the accessibility to investing and the accessibility to quality advice, I think that is what will swing the pendulum in favor of the B30 towns in the near future. Because I'm not saying there will be a saturation of T30 in the overall investing scenario, but I think we will have to get down to B30 for us to start getting more and more investors. So it's a matter of time. It's not a if or a, it's not an if, it's a when.
So looking at this data, are you able to figure out that are we moving towards financial literacy, or is it just the pandemic post impact that we are looking at now? And obviously these people who might have invested during the pandemic and now the market has been volatile and giving a single digit return, so the volatility must have really impacted their portfolio also. But do you think this particular trend is moving in a direction where we really want investors to be financially aware and educated about their investment, or you think it's just a one-time phenomena which might sustain, but then in a very patchy manner?
I don't think so. And I'm specifically looking at the cohort behavior of 2019 to 2023. And we have at least 5 years of data for the first cohort, which is the batch of 2019, right? At that point in time, the first time investors actually added 10 lakh SIPs. And in the same year, added on another 4 lakh SIPs. And if I look at the subsequent years, 2020 to 2023 financial years, they have added collectively about 21 lakhs of registered SIPs. That's probably a 3.5x jump in about a 5-year time frame, which I think is phenomenal. And if I look at 2020 and the subsequent years, you can practically see the same pattern of investment. So people are continuing to invest. And even this year, the numbers are reasonably high. So it's not as though you're looking at a very short-term blip and saying that, okay, pandemic provided a sort of bonanza for equity investors, and therefore they are staying only for the short run. I don't think it is that. So we will see this as a trend. Like I said, I think these are the signs of a maturing investor ecosystem, where people are looking at the long term, people are looking at the different options that they have, and then considering very carefully. Like I said, 95% have an advisor or a distributor. So there is an intermediary that is also offering quality advice, and that will be the difference maker going forward, that the quality of the advice that you get is going to make you stick to the market or not. And on that, I'm very confident.
All right. So moving on, and maybe this is the last question now. Do you think these millennials are investing with a very goal-based strategy, or because it's through mutual funds? I mean, that's the basic way to invest in this particular asset class, equity, if we have to enter through mutual funds. What do you have to say about that?
So we don't have particular data on that in this particular report. But what we do have is the other studies that we have done. For example, the Family Day survey that we recently published. The interesting part that we have seen here, and it is related to what you said about the increasing participation of women in investing. What we have seen is that women are far more goal oriented, whether it is to do with short term things like create an emergency fund, or even in terms of long-term goals like children's education and retirement. And there's not a gender comment, but men are far more biased towards getting better returns and looking at it from a very portfolio angle as opposed to a long-term objective. Those people in that sense are a little less structured in terms of goal-based investing and are more in from a portfolio returns and what is the best way to grow my portfolio and looking at a particular large sum to take care of their long-term needs, whether it's education, retirement, buying a home, any of those things. So I see a gender difference there and not necessarily a millennial difference, although I think the millennials as a cohort probably are more aware of the needs that they will have later in life, and therefore they are structurally preparing themselves for those long-term goals, even if not specifically investing for that.
All right, that will be all. Thank you so much, Manu Prasad, for being on the show and helping our viewers with this data. And on that note, let's take a quick break. Post that, we'll be talking about group term life insurance.